It wasn't very long ago that if the Bank of Canada raised interest rates 0.5% or 50 basis points in one go, we would all be saying, holy, did they ever raise interest rates a lot today? But now we're saying, hey, they only raised interest rates 0.5%. What a deal. Boy, things have sure changed a lot in the last 6 months. Hey everybody, welcome back to another news recap here on Bald Prairie Real Estate. My name is Matthew, real estate agent in Regina. That's my trusted assistant, 𝗤𝗲𝗲𝗲𝗲. We'll be talking about that. Normally I put these videos out on a Friday, but I wanted to get it out early this week to specifically talk about Bank of Canada and interest rates, but also Teranet put this report out just the very end of last week talking how they have tracked the largest single month-over-month decline in house prices in Canada. This was all over the news. I saw a lot of people on YouTube talking about this. But everybody seems to have missed a very important detail in that report that you need to know about because it's probably going to change your perspective on that report itself. We'll also be talking about what's going on in the rental market and a few other really interesting topics. I think you're going to like them. But of course, let's start off with another terrible joke. How many bugs do you need to fill up a building? 10 ants. If you have a terrible joke that I can use in a future episode of Bald Prairie Real Estate, put it in the comments below. Like this video, helps me out with the algorithm. Subscribe if you haven't already, and leave comments. I love responding to you guys. Let's start this one off talking about this Teranet National Bank largest decline month over month ever in Canadian history. That's got a lot of people talking in the news. It's reported all over the place, and I saw a lot of YouTube channels talking about this in their videos. What it seems pretty much everybody missed, whether it's the news or the other YouTube channels, is that the Teranet data that they use to track for their home price index, they track closings, meaning when possession happens, not when the actual sale happened. And in their own words, their information typically trails what is put out by the Canadian Real Estate Association and the various local real estate boards by about 3 to 5 months. So when I do my Canadian Real Estate monthly market updates, which if you haven't already checked those out, you should. I'll put up one of those fancy pop-up cards and you can check out the link in the description to my newest one. That data is based on sales. Now, if you go back in my videos and go back through the Canadian Real Estate Association's data, about 3 to 4 months, you're going to see some very significant month-over-month declines that line up basically exactly with what Teranet has put out. Since then, and especially markets like Toronto, we've seen about 3 months in a row where the pace of price declines has slowed down, not increased. In fact, the average price in Toronto has gone up a couple of months in a row. So Teranet, their information is great, but it's a little bit late to the party. And if all you're reporting on is that and not talking about the fact that it's a little bit late, well, your information's a little bit outdated as well. Next topic from rentals.ca, they track rent prices across Canada, and they saw the largest month-over-month increase in rents, about 4.5%. That's very significant. We've been seeing rents increase pretty much across Canada at a very rapid pace. Toronto, they're up like 30% year over year. Pretty much everywhere in Canada, we see rent prices much higher than obviously the pandemic lows and higher than the pre-pandemic highs that we saw before that. This has mainly been driven by a significant number of new Canadians coming to Canada. They're going to be looking for housing, and a large number of buyers that are sitting on the sideline right now, waiting things out to see what happens with interest rates, house prices, the real estate market in general. So you've got a large number of people looking to rent right now, and that's driving up rental prices like crazy. This article is from Canadian Mortgage Trends talking about a recent speech made by 𝗪𝗻𝗲𝗲 to a mortgage broker convention in Vancouver. If you don't know who 𝗪𝗻𝗲𝗲𝗲 is, he's the chief economist at CIBC. Really smart guy, puts out a lot of good information. And he said that this is not a meltdown of the Canadian real estate market, but we have to accept some significant short-term pain and that higher rates are here to stay. Now, normally 1.75% is about the Bank of Canada's neutral rate. Obviously at today now, we're at 3.75%. Probably going to see that go up some more from here. 𝗪𝗻𝗲𝗲𝗲 is expecting that the Bank of Canada is going to start dropping rates late 2023 into 2024 to get back to their neutral rate, but he doesn't think that's going to be 1.75. He actually thinks that we should be expecting the new neutral rate to be about 2.75 to 3%. So we are probably going to see interest rates dropping at some point here, and we're going to hopefully get back to that neutral rate once the Bank of Canada gets inflation under control. This next news article comes out of the East Coast, where in Nova Scotia, the provincial government there is essentially putting together legislation that is going to override Halifax's municipal government's zoning control and bylaw control because they want to see more houses getting built and also the ability for zoning to be changed either easier or to get rid of zoning entirely to have more diversity of homes in different neighborhoods. And I don't think this is the last we're going to hear this. In fact, I think Nova Scotia is going to be a trendsetter here where they are going to see the provincial government take away some of the regulation or regulatory ability from the municipal government, because a lot of provinces see the municipal government in their way of getting more homes built in cities. So they're just going to take over that and say, look, we're going to get more houses built. Again, I think this is going to be a trendsetter coming out of Nova Scotia. Ontario's already talking about this. So don't be surprised if you see this coming to a market near you. This article from blog.to is talking about the price of rent versus the price of ownership and that gap between the two, where in Toronto, it is the largest in Canada. The cost of ownership is about 45% higher than the monthly cost of rent. And they only talked about mortgage costs here, not property taxes, anything else. So that's pretty significant, 45% more to own a property in Toronto. Of course, now we've seen in Toronto rents are up about 30%. They've been skyrocketing all year long, and we've seen house prices coming down. It's gonna be really interesting to see what happens as that gap starts to shrink, because it will probably start coming down as we see house prices drop, but also the cost of rent going up. Last article, and I talked about it in the intro, Bank of Canada raised interest rates 50 basis points, and it wasn't that many months ago where we would have said, wow, that's a huge increase. Now we're saying that's it. In fact, the markets and a lot of people were expecting 75 basis points. The poll I put up just a couple of days ago, the majority thought that we were going to see interest rates go up 75 basis points. I was banking on 50 until we saw the inflation data, and then I was kind of leaning more to 75 basis points. I should have stuck with my original prediction. That would have been right, but my interest rate predictions have been all wrong so far this year, so that doesn't surprise me at all. Of course, will be another meeting before the end of the year. Don't be surprised if these interest rates go up again. They are, of course, going to be watching what happens with inflation. So until we start seeing inflation continue down and continue down at a fairly significant pace, probably going to see interest rates continue to increase. There you go, guys. That's the news for this week, a little bit earlier than normal. I'm also working on a video, hopefully going to have it out fairly shortly. How to win in a declining market. For those of you that are thinking about buying, not sure what to do, it's a declining market. How do you get the best deal possible? Hoping to have that video out here in about the next week or two. So keep an eye out for that. If you haven't watched my Canadian real estate market update, right here is the most recent Canadian real estate market update. As always, guys, please like this video, subscribe if you haven't already, leave comments, and thanks for watching.